All right, welcome back to another episode of Asset Coach and Tax Strategist. My name is Robert Wolf. I'm the CEO and founder of Terra Firma Business and Financial Consultants. And so we're continuing our series on financial distributors. And so our first episode was really talking about, from a high level, the basics of who are the financial distributors. So if you remember, it's banks, investment companies, and insurance companies. Okay. So these next episodes, I don't know how many episodes we're going to do. We're going to do as many as that we need to get the content and the information out there. So disclaimer, this is not investment advice. We're not telling you what you need to do. This is educational information purposes. We don't know who you are. This is stuff we help our members with. If you're interested in becoming a member of Terra Firma, what's that mean? Reach out to us. We'd be happy to have a conversation, take you through that process to see if you qualify to be a member of Terra Firma. But at the end of the day, what this is going to go through, it's going to go through a little bit more information, dive a little bit deeper into some of the financial distributors. Now, we're not going to break them down as we did in the first episode where we talked about banks and then about banks and then investment companies and about investment companies and then insurance companies and about insurance companies. Moving forward, we're going to blend them all together. And why are we going to do that? Because they all blend themselves together. They use all this stuff. And so what we need to understand really is go back to our episode or our content talking about the 5Ds or what we talk about, the 3 stages of an asset. And we go through the 3 stages of every asset because that's what these financial services, these products are. The financial distributors are creating assets for you and I. Okay. So go back to that episode, learn about that. And then we talk about our 5Ds, deductions, depreciation, distributions, debt, and then decentralization. Those are the 5Ds. Go through that and then come back to this episode if you haven't already seen that. Okay. So I'm going to go ahead and share my screen. Let's dive into this and talk about this. Again, I have no idea how many episodes we're going to do this in. But at the end of the day, I just want to dive into you and pour into you. So the first thing we need to understand is when we're looking at a lot of this stuff, we need to understand your ability to be in a quote unquote investor. Okay. We're going to use the Securities Exchange Commission. And that's why I'm on their website, the U.S. Securities Exchange Commission, or the SEC. We need to understand what category we're in as an investor to have access to these financial distributor products. Okay. Because if you're what they call a accredited investor, you get a different pool of products and services because you meet their criteria of being accredited. If you're not meeting their criteria of being credited, then that means you're not accredited. Plain and simple. How do I know if I'm non-accredited? Then you need to find out if you're accredited. It's very, very simple. So let's go through this first, dive into this a little bit first, and then we'll start diving into some of the other financial distributors, products, and services and see what's out there. And the reason why we're starting here is because this leads into some of that. And when we talk about some of that, they're going to say, time out. You can only have access to this stuff as an accredited investor. And I want you to understand why, right? I don't want this accredited investor thing popping up and you're like, I don't know, am I that? I don't know if I'm that. Okay. Most accredited investors know they are. They just don't know what accredited means or what's the benefit to them. Okay. And I use the term benefit because there is a benefit because you do get access to other products and services and such. Okay. Now, remember, not investment advice here. Remember, when we're talking about investments per se, there's risks to everything, including cash sitting in a checking account, right? You got inflation risk or loss of interest or return risk. Okay. So everything has risk. Okay. It's controlling that based on understanding your risk tolerance, understanding your portfolio or the balanced portfolio of diversification and allocation. Okay, so those are some terminology that we use. Now, I kind of fall into Warren Buffett's category of diversification is for the person who doesn't understand what they're putting their money into. which is the majority of people, which is why the Securities Exchange Commission creates these rules, because the majority of the people are what? Non-accredited investors. Okay. So it's important to understand this. All right. Now let's dive into this. What is the role of an accredited investor for companies raising capital? Oh, so are we talking about banks? No, we're talking about companies raising capital. Okay, and we'll talk about this because they'll discuss this as well. The accredited investor definition largely determines who is in their pool of potential investors. There's that word pool again, right? Told you that word is the most important word when you're talking about wealth building and tax savings. Pooling is everything. Okay. Everything. Okay. And so, and for investors, whether they are eligible to invest in many early stage companies. Okay. So basically, this accredited investors really are the, I want to say the guinea pigs, but when a new product comes out, when a car company creates a new car model, or there's a new TV or some kind of new widget, right? It's always more expensive. And not everyone can afford that expensive thing, can they? And it's purposely designed that way. Companies take products, take it out into the marketplace, try to recoup some of the cost invested into creating that product or service. And then with people buying it that have the means to do so, they can afford if that product is faulty. Oh, this car, I tell you, the electrical system is horrible. Well, now the company that made that product knows, ooh, we got to go fix that. But it doesn't destroy that individual's world because their car's electrical system glitches. Sure, they may be upset and mad, but doesn't change their world versus somebody who may not have the financial means or the abilities to just not allow that to affect them. So when this happens, the manufacturer, the company that creates this, fixes it. And as they put more money into it and they fix it, it becomes less and less expensive. More and more companies start offering it, and competition kicks in. And then the price point becomes more affordable. Think about flat screen TVs. Okay. In my early 20s, they came out with plasma TVs that were flat screen. And I think the biggest you could get, if I remember, I'm just going off the top of my head, is like maybe 40 inches. Maybe not even that. But it was like 20, 30 grand. Holy cow. I knew a handful of people that had that, and I would look at them like, you spent that much money for that? Yeah, that's basically a car you put on your wall. That was insane to me. I was not of the financial means to be able to buy that. Somebody who thought that was not a big deal did. They thought, hey, that's cool. I want one. Right? And now today, you can get an 85-inch flat screen TV, 400, 500, $600. How is that even possible? I just explained why. Okay. And it all starts with the pooling of accredited investors as an example. Okay. Now, there are some products and services that they do not make for the average investor, the non-accredited investor. But within guidelines of the Securities Exchange Commission, there are some financial distributors that will create a product for non-accredited investors by registering it with the Securities Exchange Commission, following a bunch of guidelines and regulations. But by doing that, there's a lot of safeguards and protections within that as well. Okay. But they do it based on pooling more of that something. Okay. So it's just layering of pooling of things, layering of leverage of things. Okay. So that's important to understand. All right. Let me dive back into here. Okay. So to early stage companies, many of the offering exemptions under the federal securities laws limit participation to accredited investors or contain restrictions on participation by non-accredited investors, like I just explained. And why, right? It's the Securities Exchange Commission. Here's the thing. You've heard me say this about the IRS. Too many people look at all this stuff from a negative perspective. They're out there to limit my ability to do this. They're trying to protect you as the public, okay? Because they know humans have this ability to be greedy and seek power. We're seeing this in our country today. You have certain people that are seeking more power and they act a certain way to do that. And unfortunately, from a spiritual perspective, I call that the devil, which has always existed, right? So you have this spiritual battle. It falls into it because this is man. We're building this out. Okay. So these are here as a way to help you to protect those that have less ability to deal with the big financial loss. But for you that do qualify, they're telling you how you can qualify and how to do more. Okay. So the adage, I bring this up all the time. The adage that says the wealthy get wealthier. Yes, that's the way the game is played. That's how the rules are designed. But you got to understand the rules. And therefore, everybody, we all have access to them. But it's like a video game. If you have not passed level 1, you will not go to level 2. Ever. Ever. You got to pass level 1. And then when you finally make it to level 2, you will never get to level 3 unless you pass level 2. Period. Such is life. That's what we're talking. So you just have to have access. Look at the rules that are for your level, so to speak, and go learn how to get to level 2 and make steps and actions and do things to get to that level 2. Don't sit around blaming other people because they, blah, blah. Shut up. It's all there. It's all there. You need to make those decisions. Well, Bob, I'm not comfortable. Then don't be comfortable. Stay at level 2. You won't go to level 3 then. That's not everybody else's fault. That's your fault. Or embrace that and say, I'm completely comfortable here. Okay. All right. How can did individuals qualify as accredited investor? Well, individuals, natural persons, may qualify as accredited investors based on wealth and income thresholds. Okay. Based on this, or other measures of financial sophistication. So this will make sense. So financial criteria, net worth of $1 million, not including your primary residence. Okay. This is individual or with a spouse or partner. Okay. So $1 million. Or income. Notice I said or income of 200,000 as an individual, taxable income, your income, or 300,000 with a spouse and partner in each of the prior 2 years and reasonably expects the same for the current year. Reasonably expects. Okay. So it could be either or. You may be, well, Bob, hang on. Between my wife and I, we only make 150,000. Okay. But our net worth is 2 million. Great. You're an accredited investor. You qualify in bullet point 1. Or my wife and I make 600,000, but we don't have a net worth over $1 million. We're doctors. We just got out of medical school and our residency. Now we just got our jobs. Combined, we make $600,000, but we don't have a net worth, positive net worth yet. We have a lot of student loans. Great, you qualify based on your income. Okay, that's it. Done. Now, professional criteria. So notice the other thing, other measures of financial sophistication. So investment professionals in good standing holding a general securities license or an investment advisor representative. So I have a Series 65. Technically, I'm an accredited investor. If I did not qualify for these first 2 bullet points, I would based on a professional criteria. Or private securities offering representatives, Series 82. Okay. Directors, executive officers, or general partners of a company selling securities. Selling securities. Okay. You can't just be a business owner. You have to be selling securities. Okay. Of of these things. All right. Any family, client, or family office that qualifies. Okay. Or investments in a private fund or knowledgeable employees of the fund. Okay. Now, how can entities qualify? Well, okay, so depending on the structure of an entity, the assets may allow them to be an accredited investor as an entity. Entities owning investments at over $5 million. Investments doesn't lay out what investments, it says investments. The following entities with assets in excess of 5 million: corporations, partnerships, LLCs, trusts, uh, nonprofits, employee benefit plans, family office, or family client office. Okay. Owners are accredited. Entities where all equity owners are accredited investors. Okay. And then advisors. Pretty simple. Here it is. It's not a lot of pages, right? It's just literally right here. Done. Pretty simple. Okay. So accredited investor, very important foundation as we start talking about the rest of the products and services, as we go into the financial distributors and dive into that a little bit more, and see what this means to you. This is a huge, very important. When I have people come to me that are non-accredited investors and they're like, Bob, oh man, there's got to be, other things that we can reduce risk and make more money and all that kind of stuff. And I said, there are, but you don't qualify because you're a non-accredited investor. Well, how do we qualify? Well, here's the rules, so you got to take steps to get here. Oh, that seems like it's going to take, it may, I don't know, it may take forever. I don't know. But here it is. Here's the guidelines. You know how to play, right? And you know what decisions to make to get to where you want to attain. So if that's important to you, now you know. Now you know. Well, I don't know if we can do that. Well, then go find a business partner. You have a skill and somebody has the financial wherewithal and bring in their finances and your skill, create a business that you guys can qualify as a credit investor through a corporation or an entity, right? There's ways to do it. The Securities Exchange Commission gave you the ways. You just got to figure it out. Okay. And so this is very important. Now, once you're a accredited investor, doesn't mean like you've hit the holy grail. No, there's still decisions that need to be. There's still risks. There's still understanding of financial literacy and everything that needs to be. It's just the Securities Exchange Commission is just saying, if you have a financial loss because of this, well, that's on you, pal. Just plain and simple. That's what they're saying. It's on you. You're an accredited investor. But isn't that what we want? Isn't that what we want? Personal responsibility and control of how we accelerate our wealth. Isn't that what we want? Yeah. So don't fight and be upset that there's a rule for it. It's what you want. Great. Now what? Now what? So, hey, if you liked this content, give us a thumbs up. Give us some comments down below. If you haven't subscribed, oh my goodness, subscribe. There's so much content and so much wealth of information here. It's ridiculous what we're doing to give away. And there's plenty of YouTube guys out there that are really good at different areas of what we're talking about. We're trying to give you a 30,000 in the air just from my philosophy, my methodology, how I understand things and what steps we need to take. So, but anyways, thanks so much for your time and we'll chat soon.